Hello, everyone. My name is William Taipan William. Today is October the 26th, and it's time to open my channel again. Today, I mainly want to analyze and report with you 3 good news worth paying attention to. The first article, Wall Street Tycoons began to plan layouts for Trump's victory. Chapter 2, Bloomberg Report. Investors continue to increase their holdings of gold before the U.S. election to hedge the risks of inflation and populism as U.S. election day approaches. Only 10 days before November the 5th, investors are highly alert to changes in the competitive situation of candidates. Although it is difficult to distinguish between Trump and Xi Jinping in the polls of the swinging state, the gambling market is more optimistic about Trump in terms of odds. Some large hedge funds and capital management companies have begun to lay out transactions that may be profitable if Donald Trump defeats Kamala Harris in the general election. For example, the share price of private prison operator Geo Group has risen by 21% since October, which is expected to record the best single-month performance since 2022, while the stock price of Bitcoin miner Riot Platforms has risen by 34%. Because Trump advocates the America First policy, the tariffs will boost the local manufacturing, infrastructure spending and prices of certain materials and commodities in the United States, and the general relaxation of regulation, especially the radical antitrust position of the Biden-Harris administration, will release productivity and trigger a wave of enterprises and business activities. Large asset management companies bet that the US dollar will strengthen, and the yield curve in the United States will become steeper. The rise in long-term interest rates exceeds short-term interest rates. You also bet that the flat inflation rate, which is essentially an indicator of price pressure in the bond market, will expand. The hedge fund Third Point has increased its positions that may benefit by buying stocks and options, and reduced its exposure to companies that will not benefit. These bets reflect that Trump's agenda will stimulate inflation, which is largely affected by tariffs. Trump promised to impose a comprehensive tariff of 10% to 20% on imported goods, and a tariff of more than 60% on goods imported from China. Economists say that rising costs are usually passed on to consumers. However, there are still some fund managers who have adopted cautious strategies. Many hedge funds may be reluctant to make big bets and even reduce some positions before voting. Another news, Bloomberg Report. Investors continue to increase their gold holdings before the U.S. election to hedge the risks of inflation and populism. Gold reached a record high on Wednesday, reaching $2,772 per ounce. While gold funds recorded the largest single-week capital inflow since July 2020, trading gold is one of the strategies for investors to position Donald Trump's possible victory in the U.S. election, as the market bet that Trump's victory will trigger an inflation rebound, a high budget deficit, and a possible trade war with China. The dollar will strengthen. Data shows that hedge funds are bullish on the US dollar at a new high since June 2021. It is also noted that despite China's recent stimulus measures, investors' reaction is poor, and they are shorting China. The impact of the U.S. election on inflation may also encourage the Federal Reserve to shift gears and raise rather than lower interest rates. The third report, how hundreds of billions of dollars of funds bypass control and flee China, the collapse of China's real estate market, and economic uncertainty. The reduction of interest rates and the depreciation of RMB have prompted people to find safer places to store their wealth overseas. Against this background, China-rich people has illegally transferred hundreds of billions of dollars of capital abroad under the control of regulators. In the 4 quarters up to the end of June this year, up to $254 billion may have flowed out of China illegally. Hong Kong's official foreign exchange reserve assets are $423.4 billion. Outflow funds are up to 60% of Hong Kong's foreign exchange reserves. This number is incredible. The China Foreign Exchange Administration said that the statistical gap in the balance of payments is not rarely for large trading economies, it does not prove the existence of capital outflows. In fact, China has strict regulations and controls on cross-border capital flows. In order to circumvent these regulations, some business owners set up shell companies abroad in the name of their family members, and then use these companies to acquire shares in their Chinese-based enterprises. In this way, the China-based enterprise can be changed to a Sino-foreign joint venture, so as to be exempt from the government's restrictions on the amount of personal foreign exchange purchases, so that its Chinese owner can transfer funds to the overseas entity in the form of dividends and other payments. But these people said that the transfer of funds in this way is very slow. Artwork provides another way. People familiar with a large auction house said that most transactions are now carried out by people who want to transfer funds outside China. The method is very simple. Transport a painting or other precious works of art to Hong Kong for auction, but the proceeds from the auction will not be remitted back to China, which is stored in Hong Kong in the form of US dollars or other foreign currencies. Since there is no capital control in Hong Kong, the seller can transfer the money to other places. Cryptocurrency provides new possibilities for capital flight. Although the Chinese government banned cryptocurrency trading in 2021, it is not illegal to set up a cryptocurrency wallet. Chinese people can use human currency to buy crypto assets with the help of intermediaries. Once they have cryptocurrencies in their digital wallets, they can exchange these assets into US dollars abroad. In addition, the profit income from overseas exports remains overseas, or they raise the price of imports and so on. At present, the downturn in the real estate market, the weakening of the economy and the devaluation of the RMB have prompted many Chinese to transfer funds overseas. This makes people worse and raises a concern. If investors' emotions obviously turn unfavorable to emerging markets, resulting in heavy blows to banks holding Chinese assets, it may trigger a broader financial crisis. Therefore, the outflow of funds deserves the high attention of decision makers to adjust fiscal policies and strengthen the value of the RMB. Relying on administrative means alone to prevent capital outflow is not effective, does not cure the root cause. This is the end of today's comments and analysis of the 3 news. Thank you for listening. Please remember to subscribe, like and share. Thank you, everyone. Bye.